Free and clear of the chatter from Wall Street, you're listening to Talking Stocks Over a Beer, hosted by hedge fund veteran and newsletter writer Mike Alkin, who helps ordinary investors level the playing field against the pros by bringing you market insights and interviews with corporate executives and institutional investors. Mike sifts through all the noise of mainstream financial media and Wall Street to help you focus on what really matters in the markets. And now, here's your host, Mike Alkin.
Thanks for joining. It is February 11th, 2019. Back from a relaxing weekend. Hope yours was as well. You know, I'm in good spirits. My Islanders won back-to-back games, sitting in first place, 5 points in the lead in the Metropolitan Division, second in the conference, the Eastern Conference. So a pretty good weekend. Had my Friday night hockey game. Scored 3 goals. Not that big a deal. A bunch of old guys skating around, but still, it was better than not. But it was fun. Got my good workout in. The rest of the weekend was pretty relaxing. This is. I won't talk much sports. It's actually funny. Remember? I got some feedback, which was pretty good. Some guy says, "Well, I mean, he's a bright guy, but he's supposed to. He talks sports, and if you want to listen to sports, there's so much better out there." Well, this isn't a sports talk show, Mr. Opiner. This is a investment show, a podcast, and to share a little bit of myself and a little bit of who I am, so you get to know me. I talk about the things that interest me, and you could decide whether or not you like to listen or not. And so sports are a big part of me, and that enables you to get to know me. I don't talk about sports for more than a couple of minutes, but if I wanted to do a sports talk show, Mr. Opiner, I could guarantee you it would be a damn good sports show. But that's not what I'm here, so I just bring up a few things about sports. The other thing Mr. Opiner had was that he was very disappointed that I didn't I didn't share individual stock picks. So, no, I don't, right? I don't do that because I don't know who's listening. I'll share my thoughts on sectors, on industries, on what's going on in the economy, what I'm seeing, what my observations are about the market. But no, I don't talk individual stocks because I have no idea what my listeners' appetite is for individual names. And one of the things that drives me crazy, which I don't turn on, but if I have TV in front and once in a while if I'm really bored, I'll put on Bloomberg or CNBC and I see a guy up there pitching and opining on a certain stock. Or there's you can get anyone to comment on these programs to do, rounds of somebody who call in and ask about names, or they have opinion. What do you like? I mean, it's rapid fire stuff. And how in depth are people on that? Just because you see someone on TV doesn't mean they really know it well. They might have spent 2 seconds on it, 5 minutes on it, 3 minutes on it, and they're on to the next name. I'm not going to do that. So it's not my thing to say, yeah, I kind of like this and that. If I haven't looked at this and that, or I just have a general overview of it, I could be wrong. Right? If I haven't spent the time, right? I do the way I do my work is I do a deep dive on a company. Right? I look at the numbers, I look at the balance sheet, the cash flow statement, the income statement. I'm going to read the footnotes. I'm going to on Twitter, footnotes first, right? I'm going to do that, and before I open my mouth and tell you what I think you should be looking at or not looking at, I'm going to have a well thought out opinion on it. And even then, it's hard. This business is hard. Getting it right is hard. The markets are moving all over the place. In my newsletter, I had a stock that we had great gains on. Most of it is shorts. It's all shorts, with the exception of once in a while I'll see a deep value long. But it's a company that we had great gains. The stock was going in the direction I wanted to, going down. And we kept it on, and in a month, all those gains disappeared, wiped out, took a loss on it. Why? Fundamentally, it was doing what I thought it should be doing, but that's the science of it. But the art, right? We had a little bit of a market melt up in January, and the company hosted an analyst day, and they were able to convince investors the long term was where they should focus, not the short term issues, and it worked for them. And right, but I've done a tremendous amount of work on this. Sometimes you get it wrong. So if I'm going to get it wrong, it's going to be on something I have a strong opinion on, something I've done a lot of analysis on, and that's not rapid fire stuff, right? So I'm more methodical. I don't believe in more is more. I believe in less is more. So in terms of pulling teeth, trying to get an investment idea, if somebody's listening to this to get an investment name, a company, a stock, then it's the wrong podcast. And I totally get that. I appreciate it. I get it. There's hundreds, probably thousands of them out there that people will do that. And those are great and well worth listening to. This isn't one of them. And if that doesn't work, then don't listen to it. Don't get frustrated by it, right? Because you're not going to get it. You're not going to get me telling you what stock to buy. Right. So that's that. And if you don't like the few minutes of sports, I get it. Either fast forward or don't listen. I mean, so anyway, so we start that off. Kind of a weird week last week, right? The market was just kind of, the S&P was, I think it was up 10 basis points, right? So 0.1%. You have all these concerns, still about slowdown in global growth. Is a U.S.-China trade deal going to take place? Had a little bit of profit taking. Utilities, right, more of the risk-off trade, except last year, it was up a couple percent. Tech stocks were up 2%, right? So there's, one riskier sector and one more conservative sector. But then you had the more commodity and cyclical-driven names that were down. Energy was down 3.5%. Materials were down 1.7%, 1.8%. Financial stocks were down 1.5%. They lagged. So I'm not sure really what to take out of that. The big stocks did well. A lot of those, we had on the David Keller last week. And we were talking about technical analysis, and just interesting. I was reading something, and it talked about the shares of the mega cap stocks really kept the S&P up last week. Many of them were above their 200-day moving averages. It's something that David would look at, right, going into the State of the Union. Which, the 200-day, even if you're not a real technical analyst, but you're focused more on fundamentals, it's still, as an analyst, it's still something I'm aware of. Where is it trading toward in relation to its 50 or 200-day, and how that materialized, the 200-day moving average, I don't know. But it seems to be a convenient line in the sand for companies trading above or below. When they go above it, the people will say it's breaking out above its 200-day, and that brings in some momentum, guys. But you had the State of the Union. Not much was said, right? It didn't really move the market. Really, I think the market was more paying attention to, like I just said, the real fundamental issues of a slowdown in global growth and the Chinese trade deal. So you did see some disappointing data coming out of Europe that fueled those growth concerns. And the Bank of England left its key rate unchanged at 0.75%. It lowered its 2019 growth outlook for its economy down to a little over 1%. It was closer to 2%. The EU cut its 2019 euro area growth from 2% down to a little over 1.3%. Germany reported a 0.4 month-over-month decline in industrial production, down 1.5% on factory orders in December. Right, so there's concerns out there. You've heard me talk about those before. Larry Kudlow was out, the economic advisor, the NEC director. He was out talking, saying there's still a real wide gap in the trade talks with China. Trump came out and said he's probably not going to meet with President Xi before the trade deadline. I mean, that could get extended, I suppose. And then the earnings report, they were mixed. Alphabet, Google, Walt Disney, they did well. You saw some M&A news. BB&T Bank, SunTrust Bank announced an all-stock merger, $66 billion. Makes it the 6th largest U.S. retail bank if that's approved. Saw private equity get into the mix. Hellman and Friedman paid $11 billion for Ultimate Software. So there's a lot of stuff. There's a lot of stuff going on, right? You see big bids, mergers, but then on the other hand, you're seeing it. And if earnings start to show more of a downside than upside, then you might see companies going out and buying growth, right? So if you got to think about that, the impact that could have. If you short something, you want to think about what's the potential impact of one of these things I'm short getting taken out. What would somebody pay for it? Where does it fit in their mix? I had a really good question from somebody who subscribes about a company that we're short, saying, well, would it make sense for XYZ to come in and do that? So these are just things you have to look at. Oil got hammered for the week, down 4.5%, back to $52, $53. So nothing new on that front. Just you need to think about, there's clearly not a green light, all clear ahead in the market. I mean, you had a nice bounce back in January from a brutal 3 months, especially December. But I don't think you could put it the all clear signal. The other thing that caught my attention was the crazy Green New Deal that came out of Alexandria Ocasio-Cortez, New York representative, and it was just crazy. And Ed Markey from Massachusetts. The Green New Deal. Now, Alexandria Ocasio-Cortez is from New York City. Fascinating story. 29 years old, was a bartender last year. A couple of hundred Twitter followers. Now she's got millions of them. And she is spirited. I think she's trying to make a name for herself. I think it's foolish for people to think she's not bright. She misquotes facts a lot. I think she might be uninformed, but you've got to give this woman credit because she came out of nowhere. And in 1 year, she won a congressional seat. And she's taking the U.S. Congress by storm. She's everywhere. And whether you like that or not, it is something that you have to pay attention to. It's real. I mean, she went from a few hundred Twitter followers to a few million Twitter followers. Her socialist platform, she's a socialist Democrat, resonates with people, right? It doesn't with me, but I'm one guy, right? When I think about stocks, I'm looking at sentiment. Sentiment is swaying in her favor. When you think about her Green New Deal, which really is, it's saving the earth, saving the planet, right? It's nonsensical. What it really does is provide cover for her leftist socialist agenda. That's what it does. I mean, if you read it, she's talking about rebuilding every single building in the U.S., upgrading it, replacing with state-of-the-art energy efficiency. She wants to build trains, build out high-speed rail at a scale where air travel stops becoming necessary. All this in the next 10 years. She wants to mandate that all new jobs be unionized. Right? She's wants to phase out nuclear power. So, and that's the whole thing, right? Now, listen, if you're listening to me for the first time and you don't know, I run an investment vehicle focused on uranium mining and nuclear power. But the whole thing about the leftist liberal commentary about saving the earth, you want to save the earth, you need the only scalable, completely emission-free, baseload, always there source of energy, which is nuclear. You can't phase it out. You can try. Germany's trying. Cost of energy is through the roof. CO2 emissions are up. Right. Oh, let me guess. I know. It's the waste. Nuclear power waste is contained. Fuel rods come out of the reactor. They get put in water for a few years. They then are stored on site in steel reinforced concrete casks. Other forms, fossil fuels, right? That waste goes right into the atmosphere. Solar panels. What happens when they get discarded? The cadmium, the lead, and all those stuff in there when they sit there in the landfill. I won't get into my nuclear power tirade here. But building trains across oceans and ending all air travel as we know it. I mean, come on. Mandating all new jobs be unionized. Could have a carbon tax, cap and trade. How much is it going to cost? I see that's an issue. There was no estimate, no insight into that, but trillions of dollars. Her thoughts? Well, the Federal Reserve can extend credit to power these projects and investments. New public banks can be created to extend credit. But as she says, quote, the question isn't how we'll pay for it, but what we'll do with the new shared prosperity. That's a socialist agenda. And I think it's amazing. And I don't really talk politics, but it's fascinating to watch. Right? As she has millions of followers, the young people flock to her, the liberal left flock to her. I think the powers to be in the Democratic Party want nothing to do with her. It's my sense. What do I know? But the sense I get, Nancy Pelosi just put a climate change committee together. She's not on it, Cortez, but she just came out with the Green New Deal. She says she didn't want to be on it, but who knows? But this takes the party way to the left. And it's interesting, the Democratic Party, it's fascinating how things have morphed in the U.S. I grew up in a union household. I was raised by my grandparents, a dock worker, a longshoreman, and a seamstress, Italian immigrants. I remember when I was in college, I registered as a Republican. My grandmother told me, please don't tell your grandfather. He won't talk to you. It was union through and through. This guy worked, got up at 4:30 every morning, got on the train, went to Brooklyn from Long Island, worked a 12-hour day, came home. Oh, by the way, on his way into work, he stopped off at the church every morning and said a novena. Came home and did it 6 days a week. Never complained. My grandmother was out of the house at 7 a.m., home by 6, cooking dinner, doing everything she had to for me and my grandfather when he got home. After dinner, she'd go in the garage and sew drapes, curtains, continue her work. My grandfather was a World War II vet. He was overseas. And while I didn't love having that generational gap, not having parents, it was awkward times, right? Being around school, being a young kid, your grandparents, not only is there that generational gap, but my God, they're from different part of the world, really just disconnected from things. But salt of the earth, hardworking, good people. And all I would ever hear from my grandfather and my grandmother was hard work, effort. There's no free lunch. Nobody gives you anything. You have to work for everything you get and be thankful for everything you have. If you want to get ahead, you take care of yourself. You work hard, you treat people well, you save. That's what I know. And it's interesting to see everything morph. Here we are in 2019. And my friends, who I call my close buddies, they're not Wall Street guys. My Wall Street guys that I know are acquaintances. That comes with a nearly 25-year career of being in that industry. I mean, I have a couple of guys who I consider close friends, but most of them are acquaintances. And the acquaintances and my close friends that I developed on Wall Street could come over my house, sit and have a beer with my real close friends in my real life, my personal life. And those guys are a general contractor, a policeman, 2 policemen, a fire marshal. Those are my buddies. That's who I hang out with. That's why on a Friday night, my wife and I are going to go and chill out at a friend's house. It's to our friend's house who's a New York City police officer. My in-laws, railroad family. And those were the core of the Democratic Party that I grew up in way back when. I don't know a single one of my friends who I just mentioned that are Democrats. The party that wants to give stuff away, make it easy for people, which flies in the face of everything that they were taught, like I was taught. I'm all for helping charitable work. In my position over the years, I've had the opportunity to work for some very, very successful people. And I watched the charity that these people, the charities that they're involved in, the money that they donate, the good that they do with that. Nobody's telling them to do that. Nobody's mandating them to do that. So when I see this Green New Deal and all the press it's getting, it's not about the environment. It's about forwarding an agenda. A lot of people that I read on Twitter, news, say she's a dope. She doesn't know what she's talking about. Oh, on the contrary. She is very media savvy. She's shrewd. She's sharp. I don't agree with her politics, but I don't think you can dismiss her. And it's okay to have disagreements. It's civil discourse. Those of you on Twitter would know, though, that civil discourse has gone the way of the dodo bird. People don't agree to disagree. They hurl insults. They get crazy, which is a shame. Because there's nothing better than civil discourse. You have an opinion, I have an opinion, let's try and figure it out. Maybe we meet in the middle. Maybe we don't. But it ends there. Anyway, you'll hear more from me on that. If the Green New Deal gets any traction, you'll be hearing more from me and my opinions. I'll break it apart one by one and what my thoughts are on the different components of it. And when we talk about things that aren't as you knew, so here I am talking about the way I grew up and how I think about things now. My next guest has the same view on something that's near and dear to his heart. But it's not about politics. It's about the business. the business that he's in, that he grew up in, that he's seen change dramatically, and he's trying to do a little something different about it. So without further ado, I think you might know him, Frank Curzio, on the other side of the microphone. What's up, buddy?
Hey, how's it going? A little bit of a change of pace. Huh? I'm under the gun now. I think you're going to enjoy this.
I am. This is fun. So you didn't hear my opening, but I was talking about the Democratic Party and how it's changed from the one in the union household that I grew up in isn't the same Democratic Party that I knew, and how, I was telling the story when I went to college, I registered as a Republican. My grandmother said, "Please don't tell your grandfather, he won't talk to you anymore." Right. And now I look fast forward all these years, and my friends who are naturally would be Democrats, all Republicans, because it's not the Democratic Party that they knew. And I led into you right now, and I said, my guest grew up in a business that is completely different than what he sees right now.
Yeah.
And the level of disgust that I had is kind of the level of disgust that you have for this. So, for listeners who don't know Frank, Frank grew up, his dad, Frank Curzio, was one of the original newsletter writers in the 80s, really when the newsletter business took off. And his dad was highlighted in Barron's all the time as one of the top stock pickers, and just had a really nice business. And Frank grew up around it. And, the kid tugging on his dad's coattails saying, "Hey, Dad," right? Because Frank would be taking places with him. And the newsletter business that I knew was really Jim Grant, Grant's Interest Rate Observer, the high-tech strategist from Fred Hickey, and Marty Zweig. I used to work for Zweig Domena, a big hedge fund back in the late 90s, early 2000s. And one of the original newsletter writers also was Marty Zweig. And actually, Joe Domena was a student at Fairfield University and subscribed to Marty's newsletter. And when he could no longer, he was getting out of school, and he wrote Marty a note and said, "Hey, I no longer get the student discount," or something like that. Well, one thing led to another, and Marty said, "Well, come on in." Well, one thing led to another, and now fast forward, I don't know, 35 years later, and Joe is one of the most legendary hedge fund managers the world's ever seen. So, because Marty gave him a shot. And having worked for Joe, he's flat out brilliant. So Marty had good instincts, but that was the newsletter business that I knew. And then fast forward all these years, and here I am. I had retired in middle of 2015. Those who listen know the story. My daughter became very ill, and then thank God she started to recover, and I had some time on my hands, and I started doing the nuclear power and uranium stuff. One thing led to another, and next thing I know, I put out a newsletter where I'm talking about it. And I met Frank through a mutual friend of ours. And one of the things I realized very quickly doing a newsletter, because that's all I knew. I had never seen anything else really. And I'd seen these other newsletters. But all of a sudden you got credit cards coming in, you've got management of the thing and everything. And Frank said, "Yeah, what are you doing? I'll do all that stuff for you. I've got a whole operation here." And I said, "Well, thank you." And next thing you know, I'm with Curzio Research. Well, as I got that was a year and a half ago, probably. And as I started to learn the newsletter business, now Frank had left, and I'm going to let him talk in a minute, but he always talks, so I'm going to go, and then I'll give him the floor. But Frank had been with Stansberry for a number of years. Prior to that, he was with Jim Cramer at thestreet.com. He did all these podcasts for him. He was Jim's brains, all the research behind all these names you see, and then he went to Stansberry, and then from there he set up his own firm. But it's changed a lot, because when Frank and I started became aware of the industry, and I started reading some of this stuff, I said, "Hey, Frank, who's this crackpot sitting there in a back alley saying that he's a former spy or he's a former government agent? He's got, basically Deep Throat telling him this and that, and that this." and that in the next 3 to 6 months, the price of this commodity is going to go through the roof. Like, are you kidding me? Like, what is that? And he said, I know, this is what this industry has become. And what I found weird about that is what I love about the concept of the newsletter business is it's alternative, right? So if you're me, spent your career at a buy-side firm picking stocks versus a sell-side firms write research, you don't put much value other than industry overviews from the sell side because of the biases that exist there, investment banking and all the complications and agendas that people have. And if you're a retail investor, you don't get access to that, right? So it's nice to have alternative sources, just like fake news. Well, you get fake research sometimes. So it's nice to have from the sell side. It's not fake, but it's agenda and bias driven. So it's nice to get alternative sources. And that's the appeal of the newsletter. But it's morphed into something more than that. It's kind of morphed into this gimmicky marketing cheeseball stuff. Frank, where am I wrong?
No, you're right. You're right. I mean, and it's the reason why I started Curzio Research 2 years ago, where the industry took a turn for the worse. I mean, it's about, you find new ways to market your business, right? Every company wants to find new ways to market their business. And I think Porter Stansberry led the charge with this, and he did a fantastic job. I mean, he has great analysts. I worked there. The promotions were credible. And again, they're a little salesy, but we have to sell our newsletters. But probably up to about 3-4 years ago, it really got crazy because, Stansberry has his name on the door. I have my name on the door. So, there's a credibility factor, but there's a lot of firms out there that don't. And they're being run by marketing people. And, they basically make their money based on sales, how much the newsletter is going to sell. So, a lot of these people are incentivized to almost do the wrong thing, right? So you have, if it's aggressive copywriters, aggressive marketers, everybody gets a piece. And then you have these massive promotions going out on, usually trends. And the best time to sell anything is when it's most popular. As an investment, it's the worst time to buy it usually, right? When everybody's talking about it, knows about it, it's usually the time to sell it, not the time to buy it. So they'll have these massive promos come out, whether it's crypto, whether it's, cannabis. And, it's just resulting where the publishers are making a lot of money. They have very aggressive promos where it comes down to that they're lying now, right? They're calling people legends. Warren Buffett's a legend, not young kids, that are in newsletter business for 3-4 years. You have, they're hiring CIA agents who know nothing about finance, right? I mean, they'll say, well, I worked here, and they're not a stock picker. They don't understand finance. And as an individual investor, you said earlier, where this is a mom and pop industry. This is where mom and pop turn to get away from Wall Street, to get away with the BS, right? This is what they turn to. And now, over the past 4 years, we've come worse than Wall Street. This industry is worse than Wall Street. So when I look at it and anything to sell, you're hiring these big personalities who usually have big followings, again, have nothing to do with finance. It's almost like hiring Michael Jordan to teach you about baseball, right? No, he's a basketball player. Doesn't mean just because he's the greatest basketball player to ever live, doesn't mean he knows everything about every single sport. And that's the problem that we're running into, where you're seeing these massive promos about people who know very little about finance, very little about stock picking, and they're giving people advice, and they're losing people money. And the worst part is,
by the way, losing money is easy to do, right? I mean, I lose money, you lose money. It's for guys who know what they're doing. It's hard. I mean, I was just telling people, not to interrupt you, but I was just telling people on the podcast how one of the names in the newsletter that I had that we had huge gains on, and we gave it all back, and then took a loss because I missed something on it. Right? The market melted up, and it's hard when you know what you're doing. So anyway, go ahead.
Well, think about what you just said, Mike, because that shows your credibility. I recommended GE. I thought GE was a buy, and we stopped out of it, and it was a wrong pick. And that's one of the things I focus on the most, even with my Wall Street Unplugged podcast, where I'm talking about my losers. And we're all going to have losing picks, right? I don't care if you're Buffett. I don't care if you're Ackman. I don't care if you're Icon. The most important thing, especially in newsletter business, and I think your subscribers are going to understand that. You're going to have losers, but they want to be told what to do when you're losing. Should we get out of it? Should we buy more? And that's another thing, too, where you're not seeing so many people write their newsletters now and all these massive promotions. And guys, it's not the whole entire industry. It's not. There's a lot of good guys out there. I've been doing this for 25 years. My late dad's did it for 30 years. Again, I've been in this business my whole life. There are really great guys out there. But for you, you have to understand, as a subscriber to any newsletter, whether it's our products or someone else's, are you getting that value, because we have that responsibility of giving you investment advice. We have to be professionals. You have to understand that we're out in the field. Like I took 3 trips to Consumer Electronics Show. I'm speaking at conferences. Mike's out in the city all the time. So you're out in the city, Mike, talking to your hedge fund guys. That's how we find new ideas. That's our job. That's our responsibility. And if you're not seeing the guy that you subscribe to do that, and I'm talking about, him showing up at a company, conference and speaking. Is he in the field? Is he visiting sites? Mike and I have podcasts. That we're for real. Just by us talking, you understand that we know what we're doing. And yes, we're going to have losers. We have to have more winners than losers, or we wouldn't be doing this. But that's what this business is about. It's about honesty. It's about finding new ideas you're not going to find from anybody else. And it's unbiased, right? We don't get paid by any companies. It's 100% independent. So the only thing, right, what our responsibility to you is to show you good stock picks, is to try to make you money. If not, you cancel your subscription. So I'm not looking for investment fees. We're not getting paid by companies. We're not getting paid, and that's what the business needs to go back to those traditional roots, because right now it's just, let me sell you whatever I can. And you know what? Mom and pop investors are getting smoked right now. It's sad.
How does that happen, Frank? So because I know really literally nothing about the newsletter business other than I read some of these marketing things those other places. And, people get paid. I notice some, on the very bottom, they will say, we get a marketing agreement or whatever it is. How is all that morphed, and what is that like now in the industry?
Well, I'm going to tell you this, Mike, and I'm sure a lot of people listening to this don't know this. The financial newsletter industry is one of the most scalable, high-margin businesses on the planet. I mean, your unit costs are the highest at the beginning, and then it's a matter of giving out a password, and then, your margins are incredibly high, right? Everything is digital. We're more digital marketers than anything. Now, when it comes to the marketing package, you want to try to sell something. You want to try to find an angle, and that's fine. We're going to market. Everyone's going to market, and you want to get excited about it. But the difference is, I think, Mike, when you and I are marketing something, there's numbers behind it, right? When I'd say Bitcoin's going to $1 million. All right, it's going to, can you show me any analysis? No, don't worry about it. It's just going to $1 million. And from you and I coming from a research background, we're like, come on, man, at least fake it. Yeah. Fake your model. You know what I mean? So if we think something has a chance to go up 10x or 20x, and I recommend a lot of small caps, for me, I'm going to highlight every single risk, and I'm going to have numbers behind that showing how maybe this stock was there at one point and, it got smoked, and now they're transitioning back into what they used to do, whatever it is. But there's numbers behind it, behind your predictions. So you're not saying, this is going to go up 50x and just because, Yep. So you got to be really careful who you're listening to. But those marketing packages are just, geared towards selling newsletters, and they're not geared towards, hey, let me get this person in my product because I'm going to help them, and I'm going to give them good advice, and they're going to get good ideas. And that's where the problem lies.
So go through that. When I started with Frank, it was a year and a half ago, and we said, my skill set throughout my career was as a short seller, deep dive, fundamental, and Frank had me on the podcast, and I gave, at the time, I gave him a name that I had done a tremendous amount of work on, 2 names, I think it was, and they both cratered, and they did well. And Frank said, it's not the right time probably because the market's on fire. Nobody wants to hear about shorts, but we're 9 years into a bull market. Now's the right time to come out with a short product. And so rather than saying, hey, the market's down 20%, let's come up with a short idea, Frank said, you know what, people are probably not even going to pay attention to this, but it's the right thing to do. And that's what we did. And we came out, and it was a successful launch. And it was funny because when I first started, you still have to grab people's attention. And now my world I came from is you don't want anyone to know who you are, especially as a short guy. I mean, just keep your mouth shut, stay on their radar, don't do a thing. And, Frank and I, the first couple of months, I had to be a copywriter and marketer's nightmare because anytime they said anything that was positive about me, I said, take it out, get it out of there. I don't want it in there.
It's not easy. It's not easy. And that's the hard part of the job.
And it's still very uncomfortable because you're saying positive things about yourself. Right. And I mean, you got your copywriters write it, but it's not a comfortable feeling. So,
do you remember how I explained it to you?
I refresh me.
So I said, because you were like, oh, I don't know. And because we were saying how great Mike was, because Mike had a great track record and he was a great short seller and he has this amazing background, right? So we didn't lie or anything. But I said, Mike, listen, we have to try to sell you because we're putting your promotion up against guys that are saying things are going to go up 5,000%. Right. And what do you want? Do you want them to subscribe to the garbage and get destroyed? Right. Or do you want to subscribe to your stuff and you know that they're going to,
that's right.
be
that's
well
right.
taken care of, right? So, and you were like, oh, all right. I remember that.
But and it is, and like, right, even now, I don't, if there's a marketing going out, they know better than to ask me because I'm, I'm anti-marketing, and you can't be anti-marketing and sell newsletters, right? So you have to, there's that
anti-marketing and sell anything.
Exactly.
It's very difficult. So you have to, no matter what the product is, I mean, whether you hire LeBron James and drinking it, I mean, you can't. So for us, it makes it even harder, right? Because we're competing against guys who are, basically telling half truths, right? They're just highlighting all their winners and this guy's a legend, this and that, and you're like, come on.
Well, the thing I love is the Wall Street trader. First of all, I don't even know what that means. Having spent my whole life on Wall Street as an adult, I don't know what that means. A Wall Street trader. I see a lot. Well, in the hedge fund land, a Wall Street trader is a guy that the PM, portfolio manager, gives the order to go execute the order, right? So if they didn't have the ultimate profit and loss responsibility, it doesn't matter, right? If they're executing a trade. Now, those are valuable jobs and important jobs, but they weren't the decision-making jobs, the analytical jobs. So I noticed that a lot of stuff gets bandied about that I kind of chuckle at. And a few of the things I've got my hands on to read, I just say, oh, goodness. So what, all right. So, I mean, you talk about a scalable business, right? And you came out of the gates and you had a good launch with your first promotion. Now people knew you because I think on Wall Street Unplugged, your podcast, you've had 670 or 650, something like that. But you've actually had a couple of thousand podcasts. So walk us through like your history in the podcast. And by the way, I have no idea how you've done it. I've done, I think, 50 now. And it's like, holy shit, like, oh my God, how do you do that many?
Something, Mike, I don't know if I told you this, but so when I took over for Jim Cramer, because when I worked at the street, he didn't want to do his podcast anymore. And then a person named Aaron Task did it for a little while, and then he didn't want to do it. And the podcast was daily. So for a good 2 years, I was doing a podcast every single day, which was cool because I worked at the Wall Street Hub and, we had a bunch of reporters there. So I always had people to interview and just grab people and say, hey, I like your story today. Let me, talk about it. But after Aaron Task left, they wanted to, they needed to find somebody else. So there was like 5 analysts there and they asked all the analysts, they asked a couple of reporters. And they asked me to do it. I said, there's no way. I don't want to do it. They were like, oh, just try. I was like, there's no way. So, they kept like, just, come on, you got to try it. Yeah. And then I did it and I did it and I was almost like really pissed off. Right. So I was just like, all right. And I just started ranting on everything. Like, hey, this story is garbage. Don't listen to it. You got this. This is nothing. This is a waste of your time. This is important. You need to focus on this, and just went through it. And I almost did it like as a goof. I was just like, whatever. And then they came back to me the next day and said, your ratings were like 3 times higher than anybody else. I was like, you gotta be kidding me. I was like, I don't really want to do it. So then I just started doing it. And who knows, like over 10 years later, interviewing, thousands, over 1,000 people I've interviewed, over 1,000, economists, experts. And that's the value, because people say, well, why do you do a free podcast? It's about the network. And I underestimated that over the first few years, where how many people are listening. Everybody's brilliant in some way, right? Whether it's, at your job, no matter what you do, you own your own business in a totally different industry. And, I'll come out with recommendations sometimes, and I can analyze, balance sheet, income statement. I mean, Mike, you're the greatest at it, probably doing being a forensic accountant. But you can't get
the information. Get it wrong. but you know what, Mike?
You can't. And then a guy would call me from that works at 3M or something and say, hey, don't say I work at 3M, but we deal with this company, and this company's really cool. Here's a couple. Like they give you a different perspective, because we all know that investing is much more than numbers. If it's all about numbers, you just have accountants or analysts. It's much more. It's common sense. It's getting out in the field, finding new ideas. Seeing where things are going to go, be able to predict, there's so much behind, right? Stock picking. But it's just, for me, it's just, incredible that network behind the podcast and how many people I've gotten to interview, and they have different styles of investing. And if I could tell anyone out there, if there's one lesson I had to teach, don't be stubborn with the way you analyze stocks. Always be willing to adapt. I mean, a good example is David Einhorn, who I like, but he's a value investor. In the last 6 years, hasn't been a value market. But you see someone like Daniel Loeb, who just got rid of Netflix and Microsoft, who's also, I always saw as a value guy. But you have to you have to adapt to markets. You have to use different strategies. You have to, algorithms are a big thing. Start learning about technical analysis. Start learning about different ways. And, I'm a good example of that because my dad growing up was a pure value guy. And I didn't understand growth. I didn't understand why anyone would buy Netflix at 100 times earnings in 2004. And then you look today, it's up 10,000%. And then I was fortunate to go work for Jim Cramer, and he's more of a growth guy. And I understood how to analyze growth stocks, and combining both of those and then learning from the people that I'm interviewing. It's just, I'm very fortunate and humble that, this is a job that we learn every single day, and you have to continue to learn.
It's a job that's not even work, right? I mean, for me and you, you're just enjoying doing what you're doing. It's like, I can't believe that this is like what I get to do. But, and you just said something really important, so as my inherent nature is very contrarian, glass could be half empty kind of guy. And that lends itself great to being a short seller. Now, the Achilles heel you have when that happens is, to be a short seller, you are looking for trends in the numbers or a story that you think doesn't make sense. And if you need to find it in the numbers, and then you need to marry it with a catalyst. Now, when you do that, you're going to be early, because if it was obvious, the stock would not be where it is, right? So you're betting against convention, and it takes time. And one of the things I always tell my subscribers is, we're going to scale into this. We'll put a fifth of a position on a quarter, and it's going to go against us for a while. That's okay. Don't worry about it. We're going to scale into it. But you have to learn how to do that. Now, as a short seller, I didn't appreciate very early in my career, my first couple of years, is the other side of the trade, right? So I was learning on the fly, but as I had more exposure to different portfolio managers, they'd say, well, that could be a really good short idea on the fundamentals. Now let me tell you why the stock's going to double and triple, because here's what the bulls are going to see, and here's what they're going to like. And now you talk about like a Netflix, and I'm not picking on them, but a company that has huge growth characteristics. Me personally, I'm not comfortable owning those type of stocks. Now, 20 plus years later, I know who I am as an investor. I'm a deep value guy who can wait 2 or 3 years for that value to be recognized. And on the short side, I could wait 9 months, 12 months, 15 months, whatever it may be. And I scale into the position. But I know that if I owned a high growth company, I personally wouldn't sleep well at night. Not to say it's not, not good for other people. But it's helped me as a short seller, because I know there are people who sleep like babies, right? So, and I know, okay, I'm willing to give up some parts of the market. I know what my strengths and weaknesses are. But what you were just saying about adaptability and understanding. Now, that doesn't mean you have to go from being a value guy to a growth guy to a momentum guy.
Exactly.
But there are pockets, and you need to know what these different pockets are about investing. So it's very important. And that's the thing I like, Frank, about the newsletters. You're going to get some right, you're going to get some wrong. For me, what I enjoy is the educational aspect of it, is really trying to educate people who are trying to do this themselves. And I could tell when I get the inbound mail, and I could tell if I'm at a conference and people come up to me, really working hard, studying, trying to do their own work. And I could tell if somebody understands the art of investing. They may understand the science a little bit, but the art of investing, which is where I got it wrong on this one last name, but you could tell, and that's where you really want to help them and help them understand how it works. So Curzio is doing, you're doing something a little different, and I owe you an apology because I haven't spent too much time on it.
No worries.
And I know you're doing something, and you and I have talked about it, and you just said, I'm changing everything. I'm going to try and do something different. So talk about what you're doing that's trying to change everything.
Well, with our business here is we generated $6 million over the past 2 years, right? Which is, I'm very proud of. It's, and that's a credit to my team. It's a credit to getting all systems set up. There's an industry I've been in for a long time, but over 25 years. But over the past 7 or 8 is when I really understood the marketing behind it. When, I'm working for, Stansberry and seeing the Agora branches, which owns, Agora owns pretty much, I want to say, the 6 or 7 largest financial newsletter firms and generates pretty much over $1 billion a year in sales.
How big is the whole industry, like the whole newsletter industry?
I would say it's well over $2.5 billion, probably $3 billion. I mean, these are private companies, and so it's, and that's one thing that's interesting. That's why when I explain to people how, our largest competitor, I think it was 2017, even last year, generated well over $1 billion in sales. People say, wait, whoa, what are you talking about? Selling newsletters? Right. I was like, yes, that's how big this business is. So when I look at $6 million, it's very tiny. And we generated that through 25,000 free names on our list, which is incredible considering our competitors generate. And when we break up these branches, there's probably about 6.
What do you mean by free names on a list? What do you mean?
So free names. So people who have been on our list, right? So it's like that's our list where people have listened to the podcast, the people who's, So now when we first started, we had a nice list of around 25,000 people of emails that we had that followed me. And, I knew these are people who follow me for a long time, just like if to follow anyone listens to your business, your closest people that you helped out. And when you're going to launch something, they're going to be behind you. So we had a very good start and a very good 2 years. But it's like a blip on the radar when you see how big these companies are, because these divisions that Agora has individually, I mean, there's at least 3 of them generating more than 150 million in sales. I think there's 2 that's generating over 200 million in sales, and 1 generated over 300 million in sales last year. And you see
how much they spend to generate that.
And that's the thing. That's what I'm getting to. So in order for us with 25,000 names and generating it, these guys have millions of names on the list. And to do that, what you have to do is spend money. You got to get your brand out there. You do that through, kind of creative marketing techniques. But what we realize is that when people come to our brand, they tend to buy subscriptions because they hear you on your podcast. They hear me on my podcast. That's one of the edges we have in the industry, where you're hearing us, you're seeing us in the field. We're always out there, we're writing our own newsletters, we're writing our own stuff. We're in the field. You can listen to us, where you're not getting that from a lot of other people. So what we want to do is raise money to add more names to our list, because we know based on the industry statistics that people are subscribing to our service more than 12 times compared to anybody else, 12 times greater rate. And why is that? Because a lot of times they'll have millions of emails on their list and they're just sending an email to you, right? You don't really know the person. For us, we give away a lot of free stuff where they're listening to the podcast, they're seeing some of the things that we write with what we call e-letters. And why are we giving away free content is because it's like the Dollar Shave Club. Mm-hmm. Like Dollar Shave Club went out there and said, hey, we got a great razor and it's $1 and they're losing money on it. But why did they do that? They knew that if anyone tried it, they're going to subscribe to their service, which is $9.95 a month. And they're going to be long-term subscribers because they love the product. And that's the model we're trying to emulate, because when you look at Dollar Shave Club, what happened? They disrupted an industry that people thought could not be disrupted, right? The razor industry has been around for 100 years.
Yeah.
And look what they did to it. Now they grew so much that they sold their company for $1 billion to Unilever. But look at all the razor companies out there now, right? They disrupted the industry. Yep. That's what I want to do to this industry to make it better, to get rid of a lot of the garbage out there. And for us, we're looking to raise money, because you have to be able to spend money to build up your list, but you want to do it in a smart way. And we have the IT systems, we have big data analytics where we spend a little and then we analyze the data. And if we're getting a good ROI, return on our investment, then we'll increase our spending. Say if we're looking to add names and we have a promotion going out on Yahoo or MarketWatch or CNBC, and 1 or 2 of those platforms are doing good, and we'll spend $5,000 in each of these, then we'll spend a little more based on ROI. So it's very calculated. But what we realize for our business is not only are you getting a chance to learn about our editors and understand our editors through free content and podcasts, but we have some of the best original content out there. The ideas that we offer are not any place. I mean, the ideas that we're offering are being recommended a year later, a lot higher. I've seen it all the time from other outlets. Why? Because they're not out there. They don't have the networks that, Mike, you and I have through these podcasts, that we hear from people all the time. I encourage them to email us, and they're sharing ideas with us. And when the network goes 50,000, 100,000 plus strong, you really have a really great network. And that's what we're trying to do now, is raise money to grow the business. Now, we're doing something unique, because I could have did a traditional private placement, because I've been in this industry for a while. We have good contacts. Now, what would that mean for the investor? If we did a private placement, you invest in our company, and your liquidity period, the time you could actually cash out a trade, those shares would be an average of 7 to 10 years, because that event would only come if we got taken over or if we do an IPO. And Mike, me and you have analyzed enough companies where a lot of small companies don't get to that point, right?
Yep.
So your money's locked up for 7, 10 years. So 6 months ago, I started researching this trend, and I was fascinated by it. And I like to pride myself on someone that gets the trends and gets my subscribers into trends for anybody else. I mean, I've been in shale area 2010, 11. Big data analytics, I was talking about 6, 7 years ago. I attended Consumer Electronics Show every year for the past 7 or 8 years. And when Chambers said Internet of Things and whatever, 10 billion devices are going to be connected, I'm like, what's this guy talking about? It turned out to be conservative. But being able to talk about AI and Internet of Things and big data analytics and all these trends early, I never really, we were early to those trends, but those trends are built by whatever, they existed before. Tokenization is one of the greatest trends I've ever seen in my 25-year career. It reminds me of Uber. It just makes sense. If you took an Uber,
go ahead. Sorry.
If you took an Uber, you would never take a taxi again. It's half the price. It's safer. You could go, it's on your app. You see who the driver is. There's a star rating. You get in and out. You don't have to pay, right? So tokenization is another way to raise money. And tokenization is basically selling off a piece of your asset. And you could sell off where most of these assets are liquid, and individual investors get the opportunity to invest in them. Now, why is that a big deal? Because that process is almost impossible to do unless you have a very big company. And then when you have a good big company, you're going to have to go through the investment banks, like the Goldman Sachs, the Morgan Stanleys, and these guys charge massive fees. Now, when you do tokenization, there's over 300 trillion in illiquid assets in the world. When you talk about real estate, when you talk about the corporate bond market. And imagine if you could tokenize some of these assets, sell off a piece, just like you would do with a stock, and then individual investors get the chance. How many individual investors listen to this that own corporate bonds? Well, it'd be easier if you could do it through tokenization. And don't think token like you're getting a token like, if you're a David Buster's. It's basically a digital contract, right? I mean, when you have shares of a stock, you don't have the shares in your possession. It's all kept, digitally. It's the same thing. So 6 months ago, I was like, wow, this is like the most amazing trend I've seen. And then I started saying, you know what, why don't we raise money this way? Because what happens is when we raise money, 1 year from now, this token is going to go live for investors to trade. Now, we're going to try to get on exchanges like T0, and it's going to be a fully compliant token. Don't think crypto, guys. Crypto in the past had to do utility tokens. You don't get a stake in anything.
So so can I just ask you there on,
Sure.
Whenever you and I have talked about the crypto stuff, I just kind of go, my eyes glaze over because I don't know. And I was saying, as I just said earlier, my weakness is as an investor, which I know, so I stay away from. You were just talking about you find trends early. A trend could hit me upside the head. I can't tell you, Netflix or Amazon. I miss them all. My strength though is after they've played out, then I come in on the other side as a short seller and look for them. But I don't see them early. Same thing with like crypto. So I hear crypto and I see Bitcoin and I look at it every day and I know nothing about it except that it's gone up and it's gone down, and I haven't paid too close of attention to it. So. And when you've talked to me about this, and we haven't spoken a lot about it, but when you have, I've kind of a little glazed over because in my head, it's crypto. Explain the difference between the whole craze that went from, nothing to 20,000 to wherever it is today and a token. What's the difference?
Well, the old tokens, the tokens that you see now, there's about 2,000 plus listed, right, on exchanges. Yep. A lot of these exchanges are overseas and not regulated by the U.S., because they don't even know a lot of the customers on there, right? They don't know like where they're trading, where they're from. It's almost like when you open a brokerage account, you have a social security number, right? Yep. You don't realize it, but if you're a criminal and you actually sign up for a brokerage account and you're wanted, they'll catch you in 2 seconds. They're checking, right? So that's your verification that, hey, you're a real person. You're going to pay taxes if you make money. And a lot of this stuff doesn't exist in the current world right now. But more important is ICOs are just crowdfunding. But they're not telling people that.
The ICO being like a Bitcoin or an Ethereum or something like that.
Well, no, an ICO is an initial coin offering, right? So you're looking at Bitcoin, Ethereum. I mean, these are once ICOs as well, but they've come out and they've been deemed securities, right? But these ICOs are not securities. What they're doing is if you buy into one of these companies that are utility tokens, it's like a Dave & Buster's token. So when you go to Dave & Buster's, you have to buy tokens, right? Now put it on a card and it gives you the right to play games.
Yep.
It's cool. Now, if Dave & Buster's opens up 5,000 stores across the world, you can go to Dave & Buster's any way you want and play that, which is cool. You get to use their products and services. Now, say if someone like Microsoft takes over Dave & Buster's for $100 billion, hypothetically, of course. As an investor, you get nothing. You don't have an equity stake in that business. You're only entitled to use their products and services. So these guys raised tens of millions, some of them hundreds of millions of dollars on a utility token, and a lot of investors do not understand. These are not stocks. Like if Microsoft goes higher, if earnings go higher, you benefit. These companies, you don't benefit. You just you get to use their products and services, and most of them are like, well, we'll pay you a dividend if this happens. Most of these guys are still, after a year of raising money, they're not generating any revenue, and their business isn't up. Worse than that is they raised their money through Bitcoin and Ethereum at the top of the market and left it there. Because you're talking about a lot of kids who are brilliant when it comes to technology behind crypto, but none of these kids know how to run a business. They don't know how to hire people, and they're taking all that money in without a business being created and spending like crazy to create this business right away. In the meantime, they never converted the money that they raised. If you raise $10 million for Bitcoin and Ethereum, they never converted to dollars. Well, those two cryptocurrencies are down 80% over the past 12, 15 months, and you're not telling your investors that, hey, that 10 million is now 2 million and I have no money. So most of these companies have no money. Most of them.
What claim do the investors have on that money?
Zero. They have zero. They have no claim on it. The only thing that they were entitled to do, these companies with the ICOs, the only thing that they were entitled to do is to provide you a token. They don't have to tell you anything else. They don't have to report. They don't have to do anything. But there was no regulations.
There's no quarterlies. There's no
quarterlies. There's no nothing. So that's the old style where you're seeing, even if you own tokens, is 85% of these things are going to go bust. Okay. It's just a matter of time. They're down. They're going to go down further. They're going to dilute the hell out of you. You're not getting an equity stake. You don't own anything. So as much as you say, wow, this company is great, though, you don't own the equity in the company, which is BS. So when it's almost like investing in Kickstarter or Indiegogo, where you don't get anything. You get to use their product. That's it. Were
you telling me a story? I'm trying to think back about a business that got sold. And
Facebook took over Oculus Rift.
Okay, yeah.
Right?
I remember. I couldn't remember what it was, but yeah.
Yeah, virtual reality company. It was fantastic. And so many people invested in Oculus Rift because it was a Kickstarter campaign. And then you had Facebook come in and take them over. I think it was like for either $2.5 billion. Everyone was excited, and they were like, why didn't I get anything? Well, it's because your investment in Oculus Rift only entitles you to get, hey, those nice goggles and things like that for funding the company early. And they had different levels. If you invest, 500 or 1,000 or 2,000, you get all of our products and stuff. They didn't give you an equity stake in the company, so nobody made money. And now the new generation of crypto is not like that. And that's what we're doing. We're launching a security token to raise money. And it's a security. It's deemed a security, which means it has to be compliant. We have to go, when you sign up for this to raise money, it's only for accredited investors. We can't open it up to everybody. I wish I could, but that's the way the laws are right now. It goes up to.
Can you explain that to people?
So accredited investors are allowed to invest in this, which means you have to make more than $200,000 a year for the past 2 years, or $300,000 as a spouse, or you have to have your net worth has to be more than $1 million, excluding your homes and real estate, and that makes you an accredited investor. This way, you could basically afford the risk, right? And that's the difference with the crypto industry, because if people lose money this way, or even like the hedge fund industry to the newsletter industry, Mike, I don't want to get off topic here, but the hedge fund industry, to invest in that, you pretty much have to be an accredited investor. I mean, to get into these accounts, if you lose it, you should understand the risks. The newsletter industry isn't accredited. The newsletter is just about mom and pop, and people are taking advantage of them. And that's what really pisses me off. Not to curse on your podcast, I'm sorry. No. But getting back to the tokenization.
Worse, Frank.
Getting back to the tokenization factor. Now, for us, we're able to sell for the first time in the history of the financial newsletter business. You're going to own an equity stake in our company for investors that come in. Nobody's offering that at all. And more important for us, why we choose this route? Because we don't have to go to investment bankers. We don't have to get this done by huge lawyers. We have some of the best lawyers, but it's a much cheaper way for us to raise money on our end. Why is it good for the investor? Because 1 year from now, you're going to be able to trade this token. You don't have to wait 7 years, which who knows what could happen in 7 years, whether we have 2-3 recessions by then, who knows? Who knows if the financials in the financial newsletter industry just, it just doesn't make sense anymore. Who knows? But in 1 year, you're going to be able to trade this token. And because we're using one of the biggest players in the industry called Securitize, who just signed a deal with IBM to unlock the $81 trillion corporate bond market, to tokenize it. to basically take pieces of it and sell it as a stock, pretty much, where individual investors can own the token, they can get paid interest. You don't have to go through the bond market, which is very difficult to do. So because we're using securitized, we're guaranteed liquidity through a company called Bancor. But more important, this whole system that we're setting up and launching this week, you have to be an accredited investor. It's a $25,000 minimum. And when you invest in this, they're going to go through serious checks. Know your customer, AML. You have to show proof of accreditation. Why is that important? Because this is the way it should be done. This is the way that it's done, where it's 100% legit. You know where your money is. Our goal is to trade on exchanges like T0 that just launched. They're going to be digital security exchanges that are compliant with the SEC. Open Finance is another one. Coinbase is going to open pretty soon. It's going to trade more security. It's going to trade security tokens. Coinbase trades, I think, the 5 largest utility tokens right now: Bitcoin, Ethereum, and Bitcoin Cash, stuff like that, Ripple. But that's our goal, and it's going to be a lot easier for us to get on these exchanges because we're going through all these checks, because it's a legit deal. Now, why is it good for you? Because in a newsletter industry, when you offer all of your products and services, a lot of our competitors do that, Mike, and they charge like $25,000 in a maintenance fee, and some of it is worth it, right? You're getting access to all the products, but you don't have access in the company. You don't have an equity stake in the company, right? They call you a partner, but you're really not a partner, right? I mean, if you subscribe to their newsletters now, you pay 25 grand, they all go down, you get crushed. They still make a fortune. You pay them 25 grand and they're going to make the annual fee. With this deal, you're getting an equity stake in our company. We're giving away 25% equity, which is by far the most in this business. Why? Because the deal is about you. It's about me. It's about all of us. And we're going to intend, I can't say we guarantee, intend on paying a dividend, a 3% yield annually. And anyone that comes into this is going to get all of our products and services for free. So the $25,000 minimum, think about that. For our competitors, you pay for that. You don't get an equity stake. You're not going to get a dividend. You're not going to get anything, right? For us, you're getting an equity stake in our business. You're going to participate in our growth as we continue to grow, hopefully well into the future.
All right. So if I get too personal, just tell me. So you said you have a $6 million a year business. Now, a lot of people listening, it's a big business, right? I mean, it compared to Stansberry or the other guys doing hundreds of millions, it's not. But right. So what? And again, if I cross over here,
you're not going to cross over. Just ask whatever you want, because if you're asking it, that means other people are asking it as well.
Okay. So why? So people can say, all right, so what's wrong with that? You're putting out a good product. You're going to grow more. Why not just keep growing like that? What was your motivation for doing this?
The motivation is the last 7 years alone, maybe 6 years, I've seen 4 different companies go from where we are, and maybe a little bit bigger, maybe like 15, 20 million, but pretty close to turn into $150 million plus companies. That's how much revenue they're generating annually. It's not that we're competing with Microsoft. We're not competing with Oracle. These companies have nothing proprietary. They are great marketers. They have systems that we're familiar with, where we understand when we're putting something out, we're not taking money and bringing in money and doing a Super Bowl commercial, right? It's very calculated. We understand how many people are reading the headlines, what headlines don't work. If they're not working, let's switch something else. We understand that if packages aren't working, we know immediately to pull them, because it's not like, wow, all of our packages are going to work. No. But we launched 3 back-end newsletters, and a back-end newsletter is your newsletter, Mike, Money Flow Trader. It's a newsletter you'd pay more than $1,000. Industry terms, we call it a back-end. We've launched 3 back-ends. The other 2 are my back-ends. The average money we brought in 2 weeks in that launch is $1.1 million when we launched these products. They were extremely successful launches. Again, we have a list of 25,000. Now, think about if we had a list of 100,000, 500,000, a million names on our list. Now these promotions are at 1.1 million.
So how do you get
7
that list?
to 10 to 12. So
how does that list? How does that get built up?
You build up a list by getting out there, having good ideas, and getting your brand out there. So you want to advertise on whether it's CNBC, whether it's Yahoo Finance, whether it's you're going out there to see what works. But it's different ideas. You're coming up with different marketing packages. Some might not work. Some might. A good example, if you're in a newsletter industry, is the End of America. I know the whole story about that. I used to, I've worked at Stansberry, and Porter wanted to do a whole End of America piece highlighting how much debt we're in, how it can lead to, the trade was $1 was going to crash. It was going to be.
What year was that, Frank?
I think it was 2012, maybe 2011. And all of a sudden, where it's kind of like Domino's. I know you hate Domino's. I'm going to just use this as an example. But when Domino's had a market share, right, in the pizza market, whatever it is, X billion, what Domino's did a great job at, not now, and I agree with you, it's expensive, but what Domino's did a great job is they said, you know what? They used to go in and their full bill, the average bill that you pay, the cart value was like $8. The average cart value now is like $22 for Domino's. Why? Because they said, well, let's make chicken Parmesan sandwiches. Let's make salads. Let's make dessert.
By the way,
now
as two Italian Americans, you and me, that anyone eats any of this stuff, I don't understand, but it's not pizza. It's not, I mean,
hey, listen, we're
Caesars,
from New York and there's a lot of options. Not everybody has a lot of options.
Oh, yeah, you're right. You're right. I get it.
In Florida, Domino's is the best pizza here.
Yeah, okay, I get it. All right.
So,
but my grandmother is rolling over in her grave right now, and with chicken parm like next to her. So anyway,
no, I agree. So, but when you look at Porter opened up a massive demographic where it was retirees that were looking at this, going, "Holy cow!" And it was right after the credit crisis. So, what happened during the credit crisis, man? We saw people. I mean, you and I were fine. I don't mean fine, but we have working power. If we lose everything, we could work our butts off, right? But when you have people who are 70 years old that had their home paid for and they have, maybe $1 million, $2 million. It sounds like a lot of money, but when you work for 30, 40 years and you do the right thing, 401ks, and you save it, you have a nice nest egg. And all of a sudden that declined by 40%, your home value declined by 40%. And they're going, oh my God, what am I going to do? It's insane when you think about it, right? If you're that age. So you had a whole demographic of retirees that are extremely nervous. And he came out with the End of America, highlighting all the debt statistics. Again, all this was fact and stuff like that. And, he thought like the dollar would come down or whatever. But that promotion alone, when he started sending out to different markets and different, started marketing it, it just took off. And it was a low price newsletter that everybody got involved in. And next thing you know, they sold 500,000, I think, plus subscriptions to it. Wow. And now they put 500,000 people into your company. And now they were able to market all of their editors, guys like me, all their services. They hired me. They hired great guys. Again, Stansberry's a good company and all the editors there and stuff like that. And I know that they're out in the field. So that's how the business works. When you find that one idea, you want to be able to scale it. We had 3 great ideas. We couldn't scale it because we didn't have the money. And that's the thing. I mean, 1.1 million is, again, in a couple of weeks. It's not bad. But to put in that perspective, we've had our competitors launch similar packages, not similar in terms of ideas, but packages like we've launched. And in 3-4 weeks, they've generated $15 to $20 million for the packages. So that's the difference, getting more people, because once we get our name out there, we know that when people see our services, they listen to our podcast, they know what to do. We focus on risk management more than anything, where we have stop losses on all stocks. It's not a perfect system, but we don't want you to lose money. We want you to preserve your capital. This way, we're going to get more ideas in front of you and do the right thing. And when we do that and people get to our system, they tend to buy our products. So, we're excited. I feel like we're on the forefront of one of the biggest revolutions in my history. I mean, that's how big I think tokenization is going to be. And I think it's going to be $1 trillion market. It sounds crazy, but there's $300 trillion, Mike, in illiquid assets. If 0.5% decide to tokenize, this is going to be $1 trillion market. Now, before you go any further, so I feel like I'm on an island all by myself because I really feel like I'm first to the party with this idea. And then over the last 3-4 months, the news started coming out. You had Andy Warhol, the late Andy Warhol, sold one of his paintings at auction. It was called, I think it's 14 electric chairs, sold for $5 million. They tokenized 30% of it. What does that mean? That means, Mike, you could pay $10,000 in own equity stake. I could pay 15. Someone could own 20. You're not going to get to take the painting home, but you own a portion of that painting. You own that asset. If you look at the St. Regis Aspen Hotel, just tokenize a portion of their hotel. I told you about Securitize looking to unlock $80 trillion market, just signing a deal with IBM, the corporate bond market. But we're seeing more and more companies where we just saw the first NASDAQ listed company tokenized, and it's a biotech company, it's traded on NASDAQ for 10 years. It tokenized one of its best selling drugs. So maybe they didn't decide to spin it off. And when you spin off, you're going to own a huge percentage of it, but they were able to raise money for their biggest drug by selling 15, 20% of it, kind of like what a mining company does for a royalty company, right? When they have an asset, they're like, okay, yeah, I'll sell 20% of it. Why does it make sense? Well, the asset owner, say Newmont Mining in this case, gets a check, right, for 20% of the asset. The royalty company benefits because they have a deal where they're going to be able to buy gold for whatever, $700-800 once this becomes like a big producing asset. And everybody makes out. With tokenization, it'll give you the opportunity to own a portion of a Babe Ruth rookie card, or a famous painting that you don't have to pay full price or $10 million for. And you're seeing this market come out. You're seeing more and more companies. I'm seeing guys from Goldman Sachs, Morgan Stanley leaving their businesses, leaving their posts to start companies. And now you're seeing the regulation come where T0's platform is SEC compliant that just launched. You're going to see more exchanges come out. It's very early to the party, but guys, just even if you don't like my offering or whatever, start learning about tokenization, because I really think it's going to be an amazing opportunity for so many people.
So so if I understand this correctly, and if I get it wrong, stop me. So somebody buys a token, they get a piece of Curzio, essentially. If you have a dividend, you pay a dividend. If you have the cash flow, you pay a dividend, but you don't guarantee a dividend. And the value of their investment is derived when it starts to free float. Well, when the coin starts to float, I guess I'm using stock terms, but
in 12 months from now,
in 12 months from now, so there's a 12-month lockup.
Anybody can buy it.
Okay. And do they have liquidity within that 12 months? Is there a secondary market? Okay,
no,
so there's
no secondary markets. Just like if you would invest in a private company or even a public company, you ain't going to be locked up for 4 or 6 months.
Yep. Okay, so then depending on the fortunes of Curzio Research, will the value of that coin will go up or down? Is that essentially that? And then, and how do they know that? Are you doing it quarterly? You doing it semi-annually, annually? How will they know?
Right now, we're required to report annually. We're going to be reporting quarterly. I want to treat this, and this is why it took so long to set this up, and we did it the right way, where we want to report we want to treat it just like if it was a public company. We're going to report news to you. If we hire new people, we want to be able to report to you. That's what we want to do. Right now, you're required to every year, right? And to be honest, I think every 6 months would be good, because I don't know why companies report every 3 months anyway, right? It's kind of a joke. I mean, with businesses, every business is going to have their ups and downs in a 3-month period. It almost how much you see financial engineering, because literally these companies have to report every year.
Financial engineering exists because the public markets put it there to get these guys to try and make the quarters look good. Yep.
So, Mike, let me give you a good example. Say if all of a sudden your podcast starts going huge and you're like, Frank, you know what? I'm bigger than you now, so I'm out of here, right? Just say. I'm going to start my own newsletter company because I'm the man now, right? Because Mike's getting really popular. I love it. When I see crowds around him all the time and I make fun of it. Like, I love to see it like that. It's awesome. So say now you're like, you know what? I want to compete with the big boys. Well, how would you do that? So say, you pretty much, you have to market your newsletter. You need money to market, right? One is we know the marketing strategy. We understand. We know how to build a $100 billion business. It's been written on the wall for us. In fact, our competitors write books about it, which, shows the arrogance out there. But, we know that formula. Now, say if you know the formula, now you're looking to raise money, what are you going to do? All right, well, you going to do a private placement? Well, if you ask me for money, I'm like, what am I going to get for my private placement? Well, Mike, maybe I want to be in the board. Maybe I want this. Maybe I want that, like a venture capitalist. You don't have to go through that. It's going to be difficult for a small business that's growing to raise money. But if you tokenize it, now you're selling off a 20% equity stake in your business. You can go through a company like Securitize that has a platform where all your investors who come in are going to do all the checks and stuff like that and say you want to raise maybe $2 million and grow your business. That's the best way to get. That's something I'm interested in, because I know 12 months from now, say in 12 months, I see that, you know what, Mike, I don't know if you're ready for this. I could sell out and it's not going to be, maybe I'll lose a little bit of my investment right away. But I don't have to hold you for 7 to 10 years and wait for you to go public or wait for you to get acquired. So it provides an alternative. I mean, as well as I do, Mike. I mean, you've seen some really good businesses out there, small businesses maybe generating less than $10 million in sales. This is a great opportunity for companies like this for tokenization. I think listen, it's not going to replace the New York Stock Exchange, not going to replace the NASDAQ. I expect to see some companies do this on those exchanges, but this is going to replace probably the whole pink sheet market, over-the-counter market. I mean, this makes more sense to me, where you're getting equity stake. You're able to trade these tokens a year later. It is going to be compliant to the point where, you're going to have checks with the IRS. This way you got to pay when you make money. But everywhere I look at this industry, to me, just makes sense. And the way you disrupt markets is having a better product and being cheaper. And this right now is perfect, kind of like Uber. It's cheaper and it's a much better product. That's why most taxi places are pretty much done. It's why Airbnb exists. You see these amazing companies that just make sense. To me, this makes a lot of sense. And in 2019, it is going to be the year. It's already the year. It's coming now where you're seeing tons of money being raised. And one of the biggest things that I pride myself on is the difficulty in getting to this point where you're merging Wall Street with crypto the right way you're supposed to do it. We have tons of companies coming to us right now. They're going to wait for me, right? Because there are risks. This is a new market, guys. I'm not saying if you're going to invest in it, there are risks, of course, and you have to be aware of that. I want you to read every part of our material that we send out there. I want you to be perfectly comfortable when you're investing in. I'm not just going to tell you the growth and stuff like that. But, again.
So what do you tell people about the business? I mean, do you give them insights into what the business, the economics of the business? I know you mentioned sales, but how it works? How does that work?
Yes,
how do they learn
and that's what we did with our white paper. So our white paper is now available. We're going to launch this thing, I believe, on Wednesday, which I'm really excited about because it took a long time. But you're going to be able to see a good look of how this business really works, of how at the end of the day, you want to say that we're financial newsletter companies, but we're digital marketing companies, right? We want to be able to market our products, but at the end of the day, there's room, Mike, for you to be a marketing company and provide the entertainment value by you and I being in the field, going to conferences. I just got shot. I literally got shot by a non-lethal device. All right, my whole list is going to see this. I didn't do that for entertainment value. I did it because this product is one of the most amazing things in the world. Okay. And I know, Mike, you're very familiar with the story. I don't want to tell too much or give anything away because I know the stock that it's impacting you're shorting right now. And you don't want to give away anything. But, this is a story that I felt like we were first on because of my contacts. And I went there and I interviewed police and it got personal to me because this is something that they said, if we had this, it would have saved lives. And when I got shot with it, I understood it. It's a non-lethal device, hurts a little bit, but when someone comes at you, you can lock them up. You don't have to worry about tasing them. You don't have to worry about pulling your gun out. And when I'm interviewing like the chief of all chiefs of police, interviewing police in the field, like I interviewed Bo Dietl, who's known as the most decorated officer in New York City history, is retired. When I'm doing the interview, I didn't anticipate that it was going to be emotional to me. Like these guys were like, they were in situations you don't realize. Like, you hear about how cops do bad things, and of course, there's bad apples and everything, but they don't want to pull their gun out. They don't want to shoot somebody, even if it's a good shoot, and they, God forbid they kill somebody. They live with that for the rest of their life, and believe me, man, they're really messed up. And they're just saying, if we had this device, it would have been so different. And that's what we do. I mean, to me, there's an entertainment value behind it. We're bringing a feel-good product to the market, and the stock price, I think, is incredibly cheap, and you have an opportunity to make 10x on it when you see, based on the numbers that we provide and the model we provide. And it's something I'm really excited about. So there's room to bring new ideas and market them without lying and without destroying people and doing the right thing. And that's what we want to do at Curzio Research.
Cool. All right, man. So I guess how do they find out about it? They go to the website. What do they do?
So our website's going to be on. It's going to be live. It's called CurzioEquityOwners.com. Again, it's only available to accredited investors, guys. If you're interested, please read all the material. We have the white paper. We have a safe agreement, securities agreement. Read everything. I mean, you can ask questions. We have a phone number there. We have a frequently asked questions. Again, this isn't a high pressure sale or anything. This is something that, we want to build. We know we could build. We know the formula. We're off to a great start. And with this money, we're going to add hundreds of thousands, if not millions of names to our list. And you know what? For the first time in the history of this business, you get to participate by owning an equity stake instead of just owning a couple of newsletters. And that's pretty cool as an investor. And, we do risk it as much as we can because you're going to get all our products for free. And we also intend to pay a dividend. So it's the best deal you'll see in crypto, probably the best deal that you'll see even in any private offering or anything like that. I haven't seen a better one.
All right, man. So Nick Foles is leaving the Eagles, right? I mean,
yes.
I mean, I guess he's going to pay a couple $1 million to get out of his contract. How do you feel? Do you want Foles to stay or Carson Wentz?
You know what? All right. Listen, I love Carson Wentz. I think he's a great guy. I've seen him do things even, outside of football that are incredible. He's just a good man. But what we saw last year, Mike, is when he went down and Foles came in, you had the same team, the same talent, and those guys played 100 times better for Foles than they did for Wentz. I don't know why, but those guys were a new team. They just follow that guy. And I think to build that credibility and the pressure he's going to have, I think he's going to push as much as he can. And, he's a great guy, but man, getting rid of a Super Bowl winner and Foles, I mean, he almost brought him to Super Bowl again. The guy dropped it, needed a couple good things to happen for them to make the playoffs. But when they brought in Foles, I mean, they were going to drive down at the field and had a good shot of scoring that last touchdown as a drop pass. But man, it's just a good fit there. And I don't know. I mean, it's a tough decision, but I'd like to have Foles, I think, as an Eagle fan. I feel more comfortable with the fact that he won a Super Bowl against Brady. He was there. He's got that, ego and confidence. And, that's tough to have. We've seen that in all sports on the big stage. And I don't know if Wentz could do that yet, but I know Foles can. So I got to tell you, I think I'd rather have Foles, even though it's a good choice. I mean, it's good to have the two great guys, right? You don't have that in football, but yeah, I don't know.
I'm impressed. I agree with you, actually. I agree. But I'm not an Eagles fan, so it doesn't matter what I think.
So what fan are you at football?
Gangrene, baby. Jets. Although I think I've switched my allegiance now to the Browns. I
like the Browns.
Like the Browns. I just can't do it anymore. I can't.
You know what I hate about the Jets and even the Giants? I mean, it's so corporate at these games. Not to mention, if you go, you better go 3 hours early. It's going to take you 5 hours to get out of the freaking Liberty Life Stadium, and it's in Jersey. It's a New York team. Forget about that. But the team. I mean, if you're the Patriots, it's the greatest division to be in. I mean, not only the Jets horrible, we got Buffalo's terrible. Dolphins. I mean, these are organizations for 15 years that have been terrible. But how do they charge the prices for the Jets games?
Oh, Frank, it's crazy. But it's New York professional sports. Think about it. The Knicks have lost 16 games in a row. They are the worst team in the National Basketball Association. They're 10-44, maybe. They sell out every night, right? It doesn't matter. And the feel, and you go to these games. I remember as a kid going to games where when you sat in the cheap seats, right? And it was because you get in for, I don't know, $4, $6, $8, whatever it was back then. But and then when the team stunk, people didn't show up. But now it's now forget it. It's all corporate, and it takes the fun out of it. So
it does. It really does. But that's the New York markets. But even if you want to go see the game, I don't think you can get tickets for less than $250, right?
No, not for a Jet.
Because I went to two of them, it's $300 plus, and I was like, holy cow, for the Jets. I mean, I have Jacksonville here, and they were bad this year. They were pretty good last year. But you can literally get into that game for like $40, $50, and $200 gets you a seat like in the 7th or 8th row, a 50-yard line. It's amazing.
Absolutely. But like in New York, it prices you out of it. I mean, I took my son to the Islander game. They're playing back on the Coliseum. They're splitting between Brooklyn and the Nassau Coliseum, which is a old barn essentially, but it's home. And I took him, and we sat behind the goal, and I think we paid $110 or $120 for it. And so 10-minute drive, we're there. We spent a couple of $100. And you're like, okay, well, if you had another kid or two kids, you want to take your wife, and it's a $500 night. And you say, how do families do this regularly? It's got to be corporate money, and it just loses its appeal after a while. So.
Yeah, and if people don't know, I've lived in New York for 40 years. I'm a New York sports fan for most sports, but Mike, you and I always go back because that was before I moved to Florida for the last 7 years. But Mike, you and I always go back.
Don't blame me for that, Frank. Don't blame me for that.
It was great because you just had a nice cold spell, and you and some subscriber email that he's cooking pork chops and a foot of snow, whatever. And you're like, Frank lives, he's weak. He lives there. And I was like, yeah, I feel weak right now. I just took a picture of my pool.
Absolutely.
I was like, I'll be weak all day while you guys are freezing, man. I'll take that.
That's great.
Yeah.
All right, man. Well, thanks for coming on.
All right. Thanks, buddy. I appreciate it. And but keep doing what you're doing, man. I love the podcast, love everything. And really, I appreciate that, how skeptical you are at the industry and your background, how you chose to work the Curzio research means a lot to me. It means that you trust our brand and, and that's really cool. And I just want to say thanks for that. It means a lot.
You bet, brother. All right, man. Talk to you later. Well, I hope you enjoyed listening to Frank. Frank's been telling me about this for months now, and I, as I said on the podcast, I listened with half an ear because it's crypto and digital and stuff, and that's just not what I know. And old dog, new tricks type of thing. But teaching an old dog new tricks. But he's really been excited about this, and he's been talking about the launch of this. And I see the newsletter industry, and I like the alternative voice that it can have. I agree with Frank that a lot of what I read, I think, is just makes the hair on the back of my neck stand up. And it's not about being right or wrong, because look, like I said, if you were a subscriber to my newsletter, I get some really right and I get some really wrong. That happens, right? And I try and educate along the way, and hopefully over time you're more right than you're more wrong. So it's not about that. It's about the effort and the for me, it's about where the sincerity of it. Where's it come from, and is it based in good process? And and I think I've gotten to know Frank the last year and change, and I see that where it comes from a couple of years now. And I so I see where the effort comes from, and I see where the heart is. So again, it doesn't mean all stock picks are right, because that's not what it's all about. It's about what he's trying to do is grow a business, David versus Goliath, and he's been successful so far. But he's trying to reach more people, and but I thought I'd have him on the podcast so I could learn more about it. And I said, okay, if I have him on the podcast, then I'll listen to what the offering is, because I know he's been busy doing that, and we'll all learn as we go. So anyway. Hope you enjoyed it, and I will be back next week, same time, same bat channel. Have a good week. Talk to you next week. Thanks.
The information presented on Talking Stocks Over a Beer is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.